What are the factors that affect the interest rate that you guys get when you're getting into a home, refinancing, all that good stuff? I'm going to give you guys all of that info. If you do not know, my name is Ashley Lemos. I'm a mortgage professional here to give you guys all the tips and tricks regarding mortgage. Hopefully my sound quality has improved yet again. I used a different mic today, so we're going to see how that works. Okay, what is the first thing that affects the interest rate that you get to help get you that lower monthly payment? Okay, you guys. So I want you guys to understand that it's not just your credit score that gets you the lowest interest rate. There's a lot of different factors that play into it, and I'm going to give you guys all that info in this video. The first thing, what affects the interest rate that you get besides the credit score? And I'll dive into the credit score in a little bit, but the other factor that affects it is your down payment / loan amount. The bigger the down payment that you guys put into your loan, the better your interest rate is. The reason being is because you're seen as less risky to the lender. So that helps you out a lot when it comes to getting a much better interest rate for yourself. Just how it is, you guys. And it's something that's really overlooked and something that people may not even realize. But especially if you're trying to buy an investment property per se, I'm going to give you guys a quick example. But basically, if you're trying to buy an investment property and you put even 15% down compared to 20% down, the interest rate is significant, okay? Especially even 20 to 25%. You'd be surprised that even, that 5% difference makes a huge jump in the interest rates, for example. Just keep that in mind, that is something that you guys are gonna wanna pay attention to, is that down payment. So the less you put down, the higher your interest rate is. The second thing that we're gonna talk about is your credit score. It's going to be your credit score, you guys. So depending on the loan program that we put you into, which I will get into in the next part, but basically, depending if you go FHA, for example, you need to have at least a 640 credit score or above to get you guys the best interest rates for FHA, right? If we go to conventional, for example, ideally, if your credit score is at that pretty number of 740 and above, then you will have the best interest rate for conventional. If you have a 680 credit score and you want to go conventional, that doesn't make you have the best terms, but it does still play a big part when you're trying to decide between conventional or FHA. If you have a 680, I would strongly suggest going for FHA, just depending on different factors, right? But if you want to have the lowest interest rate, ideally we could probably see between conventional or FHA. So the next factor I'm going to talk about is the loan program, you guys. So I'm not sure if you guys know this, but a lot of government loans are a lot lower in interest rate compared to conventional. Although, conventional is one of the better programs, especially if you have a higher credit score, the interest rates are a little bit higher. And because they are higher, it's just due to the fact of more stricter, guidelines for conventional. But for government loans, they're a little bit more lenient, and therefore the interest rates are a little bit lower. So you're going to see a huge difference compared to different loan programs. If you do a bank statement loan, if you're self-employed, that's going to be a much higher rate. If you do FHA conventional, if you go Freddie Mac or Fannie Mae, those are some options that I will have to discuss with you guys once we're doing the pricing and looking at different sort of interest rates for you guys. But those are factors that play into it, is the loan program. So you definitely want to make sure you ask your lender to just get an idea of each interest rate for different programs and see if it makes sense for you guys. Now, even though the interest rates are lower on government loans, that doesn't necessarily mean that you'll have a lower monthly payment, because the mortgage insurance on FHA, for example, tends to be a lot higher than if you actually went to conventional. It just depends. But a lot of times the FHA mortgage insurance rate is much higher. Therefore, the monthly payment may sometimes be a little bit higher if you went FHA compared to conventional. So those are just some things to keep in mind when you're trying to find the lowest rate. The next factor that affects the interest rate you guys get is the loan term. So is it a 15-year? Is it a 30-year? The 15-year, even though the interest rates are lower, the monthly payment is going to be higher because it's shortening your term. Therefore, the payment's actually much higher if you go 15-year. If you go 30-year, it's stretching your payment over 30 years. Therefore, the monthly payment is less, okay? So just because you see a lower interest rate for the 15-year, that doesn't mean that's going to be better for your situation. It may be, but you just want to discuss those options, those short-term and long-term options with your loan officer just to make sure that you're getting the best interest rate and program for yourself. The next thing that affects the interest rate, you guys, and you'd be very surprised, is where you're located and basically where the property is located. That is a huge thing you guys want to keep in mind about, and you'd be surprised if I choose a certain county in California, if you're trying to purchase there, or if you're trying to purchase in some other county in California, those interest rates can be totally different just depending on the property you're purchasing. That is another factor. So when you tell us what county you're looking in, that does play a huge part in the interest rate we give you. So just make sure you're being very, very upfront about what counties you're looking to purchase in. That way we can do a comparison and see if it makes the most sense. The next factor, you guys, is the type of property that you guys purchase. So that's going to be either a single family, right? A condo. Just as an FYI, the condos tend to have much higher interest rates compared to a single family just because it is seen as more risky to the lender, okay? So when you are trying to get pre-approved with your lender, please be upfront about which types of homes you're interested in. That way they can just kind of give you an example of what the interest rate would be for a condo compared to a single family. That does play a huge factor, and a lot of times people get very surprised, especially if their loan officer never discussed that or if that borrower/client never asked that question. So you definitely want to make sure that you provide that information to your lender. But yes, the property type makes a difference in the pricing, which means the interest rate that you're going to be getting. So it's just some final thoughts. Moral of the story is, okay, it's not just your credit score that affects the interest rate that you end up getting. There are a lot of different factors, and you definitely just want to make sure that you're playing into all of these things when you're trying to compare interest rates, and just trying to make sure that you're getting the best deal for yourself, but also how we structure the deal as well. It's not like we're trying to give you a certain interest rate because we want to be mean. It's just that there are certain things that are out of our control that play into the interest rate that you guys get, okay? So if you guys have any questions, please leave them in the comments below. I will leave my Calendly link in the description bar. That way you can set up a consultation with me. I will leave my states that I'm licensed in below as well. Other than that, please like, subscribe, share this content if you thought it was helpful, and I will see you guys in the next video. Bye.